Today I'm going to be taking a look at the Bitcoin price and taking a look at the long-term trends that could help us try and work out what kind of scenarios are possible from here. Before I start this video, please remember that I do these just for fun as a hobby and always speak to a qualified financial advisor before making any investment decision. So to help me with this, I first looked at the long-term Bitcoin chart using 3 monthly intervals, and this gave me some good, nice data to look at. And as you can see, by doing that, I've took away all of the noise and I'm left with a nice line graph here to help me look at the long-term price trends. Now, the first thing is it really is apparent that every 4 years, you do seem to get these cycles that everyone's talking about. And they are usually around 15 or 16 quarters from between each high. Now, it's common knowledge that this is because of the halvening cycle, where all of a sudden, roughly every 4 years, the amount of Bitcoin which the miners receive as a reward is drops by half. But actually, currently, 95% of the Bitcoin in circulation are all the Bitcoin that are ever going to be mined. So actually, the mining rewards don't really explain this now because most of the income the miners get is from the transaction rewards. So although earlier on in the history of Bitcoin, the halvenings would explain this effect, it's harder to understand now unless it's some kind of Pavlovian effect or the tiny drops in mining rewards now somehow has some kind of multiplying effect. So it kind of doesn't really make sense why we still get these cycles every 4 years because of the halvening, making relying on those cycles problematic in itself. But regardless, the past history does say that if it's safe to rely on past history. What is for sure is that if you look at each of the speculative bubbles in the price of Bitcoin that have happened roughly every 4 years, they've all coincided with a sudden flux of new demand against a scarce supply. Now, using the lower prices of Bitcoin during every cycle, I've generated this kind of intrinsic value curve, which is perhaps my version of Plan B's stock to flow model. But I do believe that there is probably a intrinsic value you could attribute to Bitcoin, which would represent what the value of it is to people who are long-term holding it and using it as a store of value or as a digital gold. And then what happens is we get these events where all of a sudden there's a surge of new demand for Bitcoin, which creates these speculative price bubbles above the kind of theoretical intrinsic value I've drawn here. Now, this you see with all commodities. So this happens with oil and gold and uranium. And using uranium as an example, because it's something I've been paying attention to in recent years, you get good examples of this here, where uranium is used by utilities in what's a kind of 5 to 10 year lead time, where they buy the uranium well in advance. They get it turned into fuel rods, and this is done over a very long period of time. There's a very thin kind of spot market for uranium. It's kind of fairly scarce at the spot market level. And then occasionally you get these times where there's a sudden rush of demand for a scarce amount of uranium that's available. And then that then creates these price values well above the actual intrinsic value, in this case exhibited by how much are the utilities paying for their long storage, represented by the utilities long-term lead times for uranium. So the latest example was when there was the war in Ukraine, and so there was a sudden drop in the availability of uranium from Russia, which coincided with hedge fund managers and uranium trust mopping up loads of uranium for their new ETF, creating this speculative bubble. And I think you've had exactly the same thing going on with the Bitcoin price over the years. In 2013, there was a Mt. Gox bubble where Bitcoin back then was only really known about by a very select clique of geeks. However, for the first time, the Bitcoin in a year or so previous to this was available on the Mt. Gox website. And so that led to a kind of sudden rush of people buying Bitcoin, but the bubble did pop and we got back down to the intrinsic value. Then in 2017, we had a lot more people knew about Bitcoin then, but it was more kind of kids and still more kind of techie folks. And we had the prevalence around here of Coinbase and Kraken and Binance. So all of a sudden, really for the first time, there was a number of trusted exchanges. And then also Tether now was in existence. And Tether facilitated the ability for people to buy Bitcoin using US dollars, or at least the a Tether kind of stablecoin version of US dollars, in a way that they weren't able to previously at a large scale. And so this created this bubble in 2017, which brought the market cap of Bitcoin up to 320 billion. Then in 2020, we had for the first time pioneer institutional interest. So companies like Tether and MicroStrategy, the first time we had big companies buying Bitcoin. But then also we had the following the Wuhan outbreak a situation where there was a lot of liquidity in the system and a lot of people with spare money had nothing much to do because they were locked up at home. So there was a big kind of retail pulse of Bitcoin buying above the supply, creating this bubble here. And so the with the pioneer institutional and retail taking us up to this roughly a billion market cap, or a price of about 60,000 US dollars. Above that now, we have ETFs coming in and buying Bitcoin. And it's very clear that the current spike in the Bitcoin price is largely due to these ETFs buying up Bitcoin. Now, apparently, the value of all of the ETFs in the US is about 10 trillion. And currently, there's about zero point 0.1 trillion of Bitcoin ETFs. So that represents 1% of the total of all the ETFs in the US. You've got to remember that the market cap, that includes all the Bitcoin, including those not being sold. So you've got like a scarce amount of Bitcoin remaining, where that zero point 0.1 trillion of ETF can then lead to a exaggerated jump in the price, enabling this zero point 0.1 trillion of ETF money, plus the resumption of the retail interest, doubling the market cap approximately from 1.2 trillion to 2 trillion, giving us a price now at about 100,000 US dollars. Now, currently, 1% of all TFs, that's a kind of believable number for me. But the question is, at what point will the amount of ETF inflow become a too good to be true number? Is that 3% or 5% or 10% of the total value of all ETFs in the US before we run out of this ETF money and then this bubble pops, just like all of the previous bubbles popped when we ran out of the new influx of money and everyone who was going to buy had bought, and you eventually get every time a kind of greater fall situation, and you naturally get the retracement back down to whatever the intrinsic value is. By the way, the amount of Bitcoin owned by MicroStrategy I've calculated at 0.03 trillion. So MicroStrategy I don't think is going to make any difference compared with the ETFs. And also, there's a lot of people talking about the Trump making the Bitcoin a strategic reserve asset. However, I found out that the total value of all the US reserve assets is only 0.25 trillion. So compared with the ETF numbers and the market cap of Bitcoin, Bitcoin becoming a reserve asset again won't actually really make any difference much. I really do look at the ETF inflows as this new supply of money chasing the scarce asset. And I really do believe that when these ETF flows reach a point where everyone who was going to invest them has stopped, we will reach the greater fall moment, and it will be the end of this cycle. So, regarding the current price and trying to work out what I'd do if hypothetically I had got some Bitcoin. Now, I certainly wouldn't be buying any now, that's for sure, because I think the reward now is probably only like a 2x or a 3x potentially versus massive risk that we've actually already topped. So I definitely wouldn't be buying now. But if hypothetically I had bought some and I'd hoped that that would have been quite a long time ago, so that you'd be looking at, something like a 5x or something. And remember, by the way, the easy money in Bitcoin was long, long ago when you used to get like 17x's. Currently, the highs from the previous highs are only like a 3x and maybe now like a 2x or a 3x. So remember that as well. What is the reward profile you're getting depending on when you buy the Bitcoin versus the risk, which is very high, obviously, with Bitcoin. But anyway, having said that, assuming you're looking at a nice 3x, 4x, or 5x or something, what would your strategy be? Well, I actually think that we're not even in a parabolic at the moment. I think we're like within a channel, which you can see easier here on the daily scale. And so remembering, of course, that with this being Bitcoin, you know, it could just dump at any moment, etc. Then you've got to evaluate what you're going to do, which is why it's important you would have bought years ago, not like now. Assuming that that was the case, I'd be looking for it to go parabolic first, and that could mean on the weekly, based on the previous pumps, you could get like a 25% candle taking us out of this channel, and then another 20% or another 20 or 20% candle. And then once you've got these parabolic moves, we know it can be a real roller coaster ride from then. That's when you really start thinking about selling. So really, it would be kind of sensible to try and use a bit of technical common sense there. But then also, given that we know the importance of the ETFs, and as I've explained, there's no other money coming in that I've heard about which can explain what's the price movement. I think about kind of ETF value becomes a number that's too good to be true. And, I would definitely say that 10% of all the current ETFs in the US would be a kind of too good be too good to be true number. But of course, you may disagree with me on that, and obviously everyone's got to make their own estimation. What is a fantasy world to them, and what is a kind of realistic time to book profits? So what I've done is here I've got my greater fools theory too good to be true meter. Currently, we've got 1% of ETFs in the US invested in Bitcoin. So when that number starts to get to 2%, I'll be starting to really feel like we're in the end game. And then, of course, if it was to go up to say 6%, you really would be thinking that you were in a too good to be true moment. And there's some other things as well, like percentage of gold market cap and percentage of the M2 money supply. Hypothetically, you want to at least get a good risk reward profile by buying it, not when it's already started a massive bull run. Think of a kind of return that fits you personally, and obviously that's why you speak to your qualified financial advisor to kind of think about what kind of prices are sensible for you. I really do think the combination of technical analysis and keeping track out of whether the amount of ETF money that's gone in is fantasy land numbers or not. This could be a guide, but there definitely isn't anyone in the world who would really, with any accuracy, be able to make a call when the best price would be to sell, of course. Now, it's hard to kind of say how much more ETF money coming in results in how much of a price increase. I'm not sure if that's like a linear relationship, because I wonder if the larger the market cap of Bitcoin becomes, the less it can be moved by the same amount of money coming in. Zooming out here, just me, not being too greedy, I'd be kind of targeting at like a 2x or 3x from the previous peak, because I do think like a 4 trillion market cap would be kind of not a too ridiculous number. A more interesting question is, once this cycle completes, will there be another one? Or if there is, will that be the last one? All the Bitcoiners have been right really up to now, as this kind of trend line that I've drawn based on the bottom numbers, it kind of illustrates there does seem to be a trend here regarding the kind of intrinsic value, or below the kind of speculative value, which is can move about according to new influxes of money coming in to buy it against a limited supply. But if this peak, let's say this peak takes us up to a 200,000 Bitcoin price, that would be a market cap of 4 trillion, which would then be about 20% of the entire US money supply, or also roughly 20% of the value of all the gold in the world. So you then have to really ask the question, where do you find the money from to get up to 1 million Bitcoin or something? You've also got to think this theory that the real value of Bitcoins goes up forever, as purported by lots of so-called Bitcoin experts. Just where does that money come from to bring the market cap of Bitcoin up to 8 trillion or 12 trillion? Michael Saylor's predicting that we'll get a 10 million Bitcoin price in the medium term, but that would actually be 10 times the entire US M2 money supply, or 4 times the value of the S&P 500, or also roughly 4 times the value of all US real estate. So you've got to ask the question, at what market cap of Bitcoin does the amount of money having to go into it just become too good to be true and just sort of mathematically impossible? What would have to happen to the US economy for that to be possible? Michael Saylor or someone will turn around and say, oh, well, we'll be getting Venezuela type inflation or something. That could explain it logically, actually. Everyone's got to kind of understand and learn about Bitcoin, learn and understand about the world economy, and everyone make their own decision as to whether they think the world economy is going to break or Bitcoin's going to break. And then we see this trend, which would then lead to a breaking of this trend that I have with this orange line. So that completes this video. Please remember that I do enjoy researching and commentating on all kinds of financial assets, including Bitcoin, just for fun as a hobby, but I'm no expert. And make sure you speak to a qualified financial advisor before making any investment decision. I'll be probably doing a few update videos where I monitor where we're going on my too good to be true meter. But otherwise, I hope you have a good week and speak to you again. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.